Hello everyone, today we're going to take a look at Tesla's stock, and I have to say this is quite a complex instrument for trading for several reasons. First of all, for quite a long time now, as you can see on the chart right in front of you, there hasn't been a clearly defined trend. In other words, you could say it's a kind of wide-ranging sideways movement. Secondly, the company itself is very public, very well known, and is something of a trendsetter in the electric vehicle market. Thirdly, Elon Musk is a media personality who speaks a lot, appears in many places, and is involved in many things. His recent disputes with Trump, for example, all of this introduces certain adjustments to the company's stock chart. And honestly, I wouldn't trade a chart like this because from my point of view, it's quite complicated. At least at the moment, there's no clearly defined trend here, and when there's no trend, it's better not to get involved. But let's still try to draw some conclusions. First of all, pay attention to the following. Today, the stock dropped with a huge gap. That is, yesterday it was still trading and closed the day around $333, but today it's already trading $30 lower. Right? Right. Why did this happen? Because the report for the second quarter was published, and it turned out that in the second quarter of the current 2025 year, Tesla delivered 14% fewer cars year over year than it did a year earlier. Secondly, its operating profit dropped, I think, by 42%, falling below the $1 billion mark. And thirdly, the company suffered significant losses in green credits, which it sold to other automakers. Revenue or income from this item fell by 51%. And it should be noted that this is about half of the operating profit. In other words, a year earlier, the company sold twice as many of these green credits to other automakers. And so this whole set of factors led to the stock opening today with a rather sharp drop, about 10%. So let's nevertheless try to figure out what to expect from this company, especially since it's definitely too early to write it off. The company has plans for 2026 for the mass launch of robotaxis and the widespread rollout and launch of electric trucks. And so, well, the situation could change. We shouldn't tie ourselves directly to the news background. We need to analyze the chart together. So as usual, let's start with the monthly candles. Let's try to determine the trend direction if we can. Monthly candles. I'll say right away that I've already made some markings on the weekly candles, but we'll get back to that later. So let's first look at the chart from a broader perspective. The green line is the 50 months moving average and the red line is the 100 months moving average. Notice here, in this section, we tested the 50-month moving average once, twice, 3 times, 4 times, and eventually broke through it and went down to the 100-month moving average. What's happening now? We broke through the 50-month moving average once, broke through it a second time, a third time, and the fourth time we only pierced it with the wick. And this suggests that the next breakout, which would be the fifth one, will very likely bring us down here to the area of $163, where the 100-month moving average is located. Well, maybe it will be a bit higher or a bit lower, because the 100-month moving average itself is also rising upward, so its value is changing. Nevertheless, the risk of a drop almost by half is present, and it is indicated on the chart from this perspective. Now let's pay attention to another point. Look, here we had some kind of peak, right at this spot, where the cursor is. The RSI reached its highest point. Then there was another price peak, but the RSI peak was lower, that's a divergence. Then an even higher price peak, but the RSI peak was even lower, that's a double divergence. What happens next? The price goes down, reaches the RSI zone around 50 or lower, after which it somehow recovers. Not very strongly, I have to say. Now pay attention here. In December 2024, Tesla sets a new all-time high, but with a significantly lower RSI peak. Of course, it's a bit incorrect to compare this after the previous divergence has already played out. But nevertheless, we can say that this high was reached, let's say, with the last bit of strength. And this also indirectly indicates that the stock is gradually preparing for a decline. You need to approach this very carefully because Tesla has been written off many times, people love to short it, and then short sellers usually end up getting stopped out or liquidated. But nevertheless, there are signs of a potential decline on the chart here, and we have to take them into account. Now let's turn directly to the monthly candlesticks themselves. So take a look. Here we had a candlestick that set the all-time high for the stock price. After that, we see a bearish engulfing pattern. The immediate target level is the base of this green candle. We test it, bounce off it, and then continue moving upward. Formally, yes, we had a reversal because this green candle, this was in angle of the March candle. And this seems to be a reversal to the upside. But, overall, we can say that for a full-fledged reversal, we still need to engulf the point where the decline started. That is the level around $388 approximately. By the way, pay attention well. I won't draw the levels right now because my color markings will pop up. Let me pause right here in the area of these highs and take a look at what's happening here. In the short term, we broke through this level but couldn't hold above it and went down. And this means that until we consolidate above the level of, well, roughly $388, it doesn't make sense to talk about any purchases. And given the divergence factors we discussed, I would actually avoid buying this stock altogether. I would consider the $388 level as potentially interesting for opening short positions, but definitely with a stop loss. So last month we traded within the range of the month before it. Right now, we're trading again within in exactly the same range. And the market isn't showing us any clear direction. So, the $388 level acts as a cap. And on the downside, we are limited by the 50-month moving average, which we'll most likely reach in the fairly near future in quite a short time. For now, I can't really add anything else. I want to emphasize this is a difficult chart for me, and right now there's no clearly defined trend. At the moment, at this point, I don't see any entry points here, neither for short nor for long positions. Now, let's take a look at the weekly candles. What do we see on the weekly candles? On the weekly candles, the fact that the red and orange lines, these are the 100-week and 50-week moving averages that are running almost parallel, indicates that the stock has been trading in a wide sideways range for a very long time. And this, again, makes it more difficult to predict, yes, to forecast its movement. Nevertheless, note that the stock closed its all-time high with a red candle. That is, on the weekly time frame, this did not happen on the monthly, but on the weekly time frame, we got a red candle, and such candles quite often signal a market reversal, which is exactly what happened in the end. The price dropped, and it fell below all the moving averages, but eventually it bounced back and reached some level. I can't even say exactly which one. Well, it actually reached the level of this consolidation zone or just a bit below it, yes, and then started moving down again. And now, take note, the current week is at risk of closing below the 5-week moving average. If that happens, it will be an additional argument for the price to continue its downward movement toward the $260 area. And if we see it break through those moving averages as well, then most likely there will be a test of the $225 level next. Is it possible to open a short position now at the weekly close? I'm not sure. Moreover, based on the weekly candles, it's, let's say, risky to do so. Why? Because your stop loss would be very wide. Your stop should be set above the high of this red weekly candle. That's why we'll try to look for a potential entry point on the 4-hour time frame. Now, let's turn on the markup that I made. And what is this markup? It's also, let's say, quite debatable. If we're talking about the ascending channel that's drawn through the points circled here, these are two lows and the high between them. Nevertheless, take a look. This construction led to the historical high being set near the upper boundary of the channel, after which we pulled back to the area of the channel's median line, that is, the central line where we have been trading up to the present moment. Accordingly, based on this markup, we could potentially expect a move toward the lower boundary of the channel, around the $190 area. Now let's look at the price levels. Let's forget about the channel for now. I'll even remove it so it doesn't distract us. The price levels I've marked are based on the daily time frame. Let's switch to it. So what are these levels? At one point, this was a historical high. We've marked the level at the highest daily candle close. It serves as a potential downside target and at the same time as support. So we've already tested it, dipped below it, and now it could, in principle, stop the decline. But at the very least, it acts as a theoretical target for a short. Next, let's look at a couple more levels. Here's the historical high, but it's very far away and not really needed. I've just marked it for technical reference. Then there's another level, the one from which the major drop started, $360. Notice that we tested it not so long ago. It was on May 28th. Then we approached it again and eventually moved down. And finally, the third level, marked in white, is the most local one, and I've highlighted it. Why? Because here we had some kind of local reversal, and when the price bounced up afterwards, we lingered at this level for quite a while. And when we fell again from above, this level essentially stopped us from dropping further. Here too, we approached it. And accordingly, with such poor statistical data for Tesla, we can expect firstly a test of the $287.99 level white one and potentially a move toward the $263.17 level. And if we close below that, then the next zone is the area of these lows at $223. The RSI is pointing down, which is generally logical because the price has dropped significantly. But I wouldn't rush to sell right on this gap. I would wait for a retest of these moving averages on the daily time frame. That is from the area of $319.50, maybe $327, with a stop above the high of this local level $338. I would probably try to take a short position on a red daily candle after this candle tests one of these levels and closes below both. That is below the 200-day orange line and below the 50-day green line. Now let's take a look. So the potential targets for the short are $288 and $263. And further down, it's $222. But the entry point right now is bad. As a rule, such gaps are at least partially filled. And here the point for opening a position with a stop, of course, is much more interesting in the area of $320 or maybe even $325. Now let's switch to the 4-hour time frame. Let's see what we can observe there. So 4-hour candles. On the 4-hour candles, the price has been trading for a long time between the moving averages. Right now, as we can see, it has broken through 2 of them with a gap. And with a very high probability, we will probably even see the price at $293 today. But here too, I want to emphasize, even here, despite everything, I would consider selling somewhere in the area of $320 to $326 with a stop around $340 or $339, something like that. Strictly speaking, I have nothing more to add. With a high probability, we will test this low, this particular low, because it was formed with very high volume. That candle was, let's take a look. And as a rule, the price returns to such points. Moreover, as a rule, these lows are usually broken because liquidity was already accumulated here, and most likely there was no point in going much further. There was simply no one left to liquidate, so to speak. But after this wide-ranging flat, most likely a new group of buyers has appeared who could serve as fuel for further decline. But I want to emphasize that right now, I wouldn't open any trades, neither long nor short, because with such data, the stock could continue to fall. But after such a gap, it could also make a significant rebound upwards. And this could be an interesting entry point for a short position. That wraps up our review. Subscribe, leave comments, give likes or dislikes. See you in the next video where we'll obviously be looking at Bitcoin. Goodbye.